Hi and welcome to the first episode of Tax Chats with me, Danielle Sherwin, focusing on all things international tax. The purpose of these sessions is to provide you with a quick and practical overview on some of the key topical issues in international tax at the moment. We'll cover a range of topics in this area, from transfer pricing to how to complete an international dealing schedule and the hybrid mismatch rules. To kickstart this 10-part series, I thought we should start with some of the basics. So we're going to start with residency. Now, understanding residency is so important because it will govern how much tax the ATO is liable to take. So are you an Australian resident is going to be different depending on if you're an individual or if you're a corporate, but both of the rules have been changing over the last few years. So for an individual, the latest guidelines from the ATO are in Taxation Ruling 2023-1, and it outlines a lot of examples, and there's some really good factors and indicators for you to keep in mind if you're advising clients on their individual residency status. And that's so important because it's so fact specific that there's a lot of area for debate in this role. So moving on to corporate residency, the corporate residency rules changed in around about 2018. So while the legislation hasn't actually changed at all, the guidelines have changed because of case law and ATO guidance. So the Bywater case was kind of the main leading indicator for this update, and the ATO has issued some subsequent tax rulings and practical compliance guidelines for taxpayers to help understand their risk framework in this area. All of this kind of pivots around central management and control, and it's most relevant for Australian companies that have foreign subsidiaries in other jurisdictions. So making sure that they remain non-residents from a tax perspective is really where you're trying to get that right. So in managing central management and control, one of the key indicators is where board meetings are held. So one of the common examples or little key tips I would say that most clients use to manage this is by having board meetings overseas, at a minimum once a year, to sign off the accounts or the tax return, and having a face-to-face with all the board members present is probably the best practice scenario there. So that's just a little quick update on some of the tips and tricks regarding residency. If you have any questions, let us know. Otherwise, I hope that provides you with a little update, gives you an indicator of where to go for information, and stay tuned for the next episode in 2 weeks' time.